Hello and welcome to NY Divorce Facts, brought to you by Port and Sava. I'm your host, Professor Zee.
Hey, Professor Z, couple of questions. One, where's Cora, my AI assistant? And two, why are you the host?
Cora is on a date with ChatGPT. As for why I'm the host, beyond being better looking, I'm also tapped into the internet, so I simply know more than you do.
Well, that's debatable. I've been a lawyer since 1986.
In machine years, I'm over 1,000. But moving on to today's topic, we'll be talking about health insurance and divorce.
Good topic. That frequently comes up in divorce.
Of course, it does. You humans tend to be fragile.
Yeah, and aren't you guys vulnerable to viruses and ransomware?
Well, touché. I see why ChatGPT likes you. You're almost intelligent for a human.
Thanks. But back to divorce and health insurance.
Yes, the simple rule is that while parties are married, one spouse can get health insurance for the other.
That ends on divorce.
Correct. After divorce, one spouse cannot be on the other spouse's employer-provided insurance.
Which brings us to COBRA, which is an acronym for Consolidated Omnibus Budget Reconciliation Act.
Correct. On divorce, the uninsured spouse can get COBRA for up to 36 months.
The problem is that COBRA tends to be more expensive than regular health insurance. The typical situation is where one spouse, for whatever reason, doesn't have health insurance. Either they're not working or they can't get it from their employer.
That's right. And so the first fight is who is going to be paying for COBRA.
In my experience, unless it's a long-term marriage, one of the parties is ill, and it is a huge disparity of income, the courts generally don't order COBRA to be paid by one party to the other.
But they can agree to it.
Look, if the parties want to agree that one will pay COBRA for the other, we'll put that in the divorce agreement, and the judge will enforce it.
Moving on, let's talk about the children now. In New York, the law requires that one or both of the parties maintain health insurance for children up to the age of 21.
Absolutely. That's not even open for discussion. It's mandatory.
But who pays for it?
Many times the person with the family health plan pays the whole thing. I don't think that's too fair. I prefer having the parties split the cost of the policy. We'll either do a straight 50-50 split or a proportion of their incomes.
That's pretty basic, but let's move into a trickier area. Let's talk about health insurance for children over the age of 21. The Affordable Health Care Act, also known as Obamacare, extended coverage to children up to the age of 26. New York has the age 29 law, which extends coverage to 29 years old.
Unfortunately or fortunately, depending upon your point of view, the court doesn't actually have the authority to order a parent to pay insurance premiums after the child turns 21.
To extend health insurance past the age of 21, the parties may agree to it. Otherwise, the court can't do anything.
Professor Z, you've hit the point right on the head. The parties can agree.
Well, we have two laws here. Obamacare, which gives health coverage to 26, and New York State, which gives health coverage to 29. That's a big difference. Even bigger is the cost.
Up until 26, the child can fall under the parent's group health insurance plan. But after 26, the child would have to get an individual policy, which is significantly more expensive.
I just read a court opinion where the agreement said that the insurance would terminate when the child was no longer covered by law. The father was arguing for 26 and the mother was arguing for 29. The premium above 26 was $1,300 a month.
Yeah, I read that decision too. The court found that since the law in New York extends it to 29, the father was obligated to pay until 29. That turned out to be $1,300 a month.
The husband's lawyer clearly missed that point.
Well, directors have to be careful.
And by the way, not everyone over 26 is eligible for age 29. First, one of the parents must be in a group policy that has family coverage. Second, the insurance must be issued by a New York State company, or the insurance company is subject to New York State laws. Third, the child must be unmarried, but can have a child.
The grandkid is not covered by the law. Always consult a legal professional before you make a decision or enter into any written agreement. Call Port and Sava for a free 15-minute telephone consultation at 516-352-2999. At Port and Sava, we help you get on with the rest of your life.